All right, so the session has this sort of aura of the moment before the shootout, right? In Old Western, you know, the classic scene like Gary Cooper in High Noon, that foreboding feeling of self-doubt and only being able to control just so much of the outcome. But there's also a sense that you could be a big winner when the smoke is cleared. Now, of course, this anxiety we're seeing now following what was last week, just absolutely remarkable. We saw a major reversal where the market was down 4% the week before, up 4% the week last week. So historically, what happens after that? Well, a month later, we're up 3%. This is on average, of course. 3 months later, 4%. 6 months later, 10%. A year later, as much as 19%. So this is what we're talking about. Of course, what we saw last week, a lot of people have written off the Magnificent Seven, but they came to the rescue big time. It was all about growth, right? So if you look at growth here, whether it was small caps, they outperformed. Whether it was mid caps, they outperformed. And of course, large cap growth, led by those Magnificent Seven stocks, came on very strong. Now, I should note, though, that the second half of 2015, here it is right here. Historically, it's the worst 2-week period in the stock market. So again, we've got those pressures building up. But this week, of course, is going to be all about the Federal Reserve, the FOMC, and they're going to kick off the rate cutting cycle. And this is what I talk about, the ghost of 50 basis points past. The last 3 times they kicked off the rate cutting cycle with 50 basis point cuts, January 2001, September 2007, March 2020. Very ominous dates. We're talking about terrible markets, recessions, those kind of things. So for stock investors, of course, the key is whether or not the Fed can steer us through a recession. Essentially, it comes down to this. When the Fed is cutting rates, and there's no recession, the market goes straight up. When the Fed is cutting rates, but there is a recession, well, it doesn't matter. The market goes straight down. All right, folks, let's bring in our next guest because over the weekend, he published a report titled Fed Uncertainty and Confusion Continues. Joining me now, Bianco Research President Jim Bianco. And Jim, you know, last week you flagged the dramatic shift. I was watching your Twitter feed. I mean, overwhelmingly, the consensus had been 25 basis points for a long time. And then overnight, it was 50-50. And you know, what is it? How did that happen? Walk us through how something like that happens.
Well, the Fed uses various reporters, you know, to kind of communicate their policy. And I might add, I don't have a problem with that because they're using public sources so that they put it out there for everybody to see at the same time. And last week, it was kind of settled that we were going to see a 25 basis point cut. But then the story came out Thursday morning. It came out in both the FT and in the Wall Street Journal. In the Wall Street Journal, Nick Timiraos is the one that's getting most of the attention, opening the door to a 50 basis point cut. And then the market went to a 50-50 probability over the weekend that we would see a 50 basis point cut, which is maximum uncertainty because half the crowd is going to be wrong. And today, as we sit here, we're at about a 60% or 62% chance that the market is pricing in a 50 basis point cut. And to further add to the confusion, most Wall Street forecasts are still 25 because they haven't updated them in the last couple of days with this new information. So it's unlike anything we've seen in the last 30 years, that usually 2 days before the meeting, it's settled. We know exactly what the Fed's going to do. We don't this one.
You know, you brought up also in your note that the Fed, this sort of designed forward guidance that they like to give. But at the same token, they keep telling us that they're data dependent. So how does it leave any room for them to even provide guidance? And particularly, and what I think another frustrating thing, Jim, is that when this data comes out, it's always up for interpretation. It's almost like art. You know, I might think it's great and you might think it's not.
I agree that on the second part, that the data, you know, they say that they're data dependent, but they don't really explain what economic theory they're using because you're right. I could look at a payroll report of 150,000 and come to a different agreement that you look at a payroll report of 150,000 and they haven't really laid that out. But to the general idea that they are data dependent, they do give speeches and they do try to lay out their thinking going up until about 10 days before the meeting. That's when they have their blackout period to try and explain where they were. And going into that blackout period, the idea was that they were going to do 25 basis points. But then this report dropped last week and it's now opened the door for 50.
Also in your report, I thought was very intriguing, this Jay Powell's desire for unanimity. This is all your Fed governors and your Fed presidents throughout history who have been dissenters. I mean, we go here to the Powell to the Powell Fed, and we don't get much dissension. Isn't this why it was designed this way? Why is it so important for everyone to be on the same page?
No, I think it is designed this way. Jay Powell laid this out in a speech in July where he said he calls all everybody. And in my term is that the horse trades an agreement to get a 12-0 vote. He believes that a 12-0 vote will give the policy a lot more credibility than if there's some dissents that puts doubt in there. The problem with that is it gives any dissenter like a veto over policy, and it makes it very difficult to try and come up with some kind of policy. And that might be the case now because there's one Fed Governor, Chris Waller, who made it clear that he wasn't interested in a 50 basis point cut, but yet the market is pricing that in. And how does he change his opinion now, or does he, and does he dissent and kind of frustrate what Powell has been trying to work up all this whole time?
All right, so with 30 seconds to go and having gone through all of your great work, what are you expecting and how do you think markets react?
I expect that they'll do 50. I think they should do 25. Doesn't matter whether they do 50 or 25 at this meeting, but it's signaling. If they do 50, they're trying to tell the market that they think that over the next year, they're going to cut rates to probably under 3%. My concern is that goes too far and that they wind up going from maybe tight policy to ultra easy policy and could be creating inflation, in 2025 by going too far the other way. If they go 25, maybe they stop at 4% as opposed to 3. Difference between 4 and 3 in Fed world is a big number.
It is. Hey, Jim, thank you so much. Always appreciate kicking off the show and the week with you. It's an important week. To Jim's point, folks, suddenly the camp for 50 basis points, he cut